Here in Europe, maybe in the States as well, feels like a quiet start to the week. We're building up to a big end to the week. The crescendo, obviously, Jackson Hole and also the BOJ testimony. But Asia seems to have come out into the beginning of this week with something of a bang. Why?
Yeah, good morning, Guy. That's exactly right. We thought that the highlight of this week was going to be 10 p.m. for us on a Friday when we'd already gone to bed. But actually, Asian markets, they've been on a gathering momentum over the past several days and really starting to kick higher again today, right across especially Southeast Asia, but also the Korean won having a particularly good day. The thinking here is basically twofold. One, the Federal Reserve is getting closer to cutting interest rates. We're pretty sure that we're going to get a start in September and a steady pace of declines from then. Maybe not the dramatic 50 basis point cut that everybody had talked about, but nonetheless, that lower interest rate dynamic that pulls down the dollar as well and lifts every other boat. And secondly, within that, the US is not really headed for a recession, judging by the latest data. The economy still looks reasonably strong as well. Demand for imports is holding up. And therefore, exporting nations, which we see across Asia, are going to benefit. So there's those two prongs that have been helping the Asian currencies in markets this morning.
Paul, you mentioned it there briefly, that case for 50. Can you walk us through what that case actually looks like? I think Goldman and arguably some folks at JP Morgan still sticking to that. But why? What is the difference that 50 makes in September over 25?
Sure. I think that 50, betrays a little bit more of a panic or concern from the Fed. 25 basis points, you think they're going to cut because they want to cut, because they feel they can cut, because they think that the inflation dynamic is at a sort of stage in the cycle where it's okay for them to make rates a little bit less restrictive and start to ease off a little bit. I think the flip side of that, if you do a 50 basis point cut, it says, hang on a second, we're a little bit worried that maybe we've fallen a little bit behind the curve or that the economic data is looking bad. And I think why the Fed is cutting is very important for financial markets and for that dynamic, because if they're cutting from a space of, kind of comfort, that conveys a certain degree of confidence. If they're cutting from a place of concern, then that's a different message as well. Now, what I would say is that the market is pricing in 100 basis points of cuts over 3 meetings through to the end of the year. So still we factoring in at some point a 50 basis point cut in there at the moment. So hasn't all come out of the mix yet.
Paul, So how much volatility should we expect around Friday? What's the market looking like in terms of the setup on the options front? What kind of numbers could we be looking at? Because Jackson Hole can be a complete snooze fest, or it can produce some big numbers.
It can, and Jerome Powell is pretty good at threading that needle and saying as little as possible to leave the market comfortable. But I think what we've seen over the past 2 weeks is that there is scope for volatility. The last thing that we want is what we're seeing right now in financial markets, which is as well as those Asian currencies getting a lift, the yen accompanying them now and starting to take the lead. And because the yen and the unwind of that carry trade was the cause of such volatility last week, people are going to be watching that very carefully in the run-up to Jackson Hole.